All right, hello my good friends out there in Trader Universe, or you guys that are just stopping by that don't trade, and you're just here for my gentle, soft, relaxing, smooth voice that just penetrates the airways. Oh man, let me tell you, what a week it is. Doug here with the LincolnList.com. This is Stock Market Mutterings for the 16th of March, and as always, my commitment to you each and every week is to try to make some sense out of this market, which could be very difficult right now because it is senseless at times, and try to provide you with some great trade setups. And if I can just dish a few your direction that puts some money in your pocket by the end of the week, man, I've done my job, and that's what we're all here to do. So I'm going to do it again. I'm going to take a look at this thing, try to iron out a few details for you, and see where we go. Now, some of you have reached out to me asking about this type of a correction. I tell you what, I did this YouTube video at happy hour. I think it's pretty good about explaining the differences between this correction and the dot-com and the credit crisis that I went through. I'm going to throw up the link right there on the screen real quick. Take a look at it if that's something that you're interested in. Now, first thing we have to talk about is the range, because it is wacky, right? I mean, we're going from a normal market. I'm saying normal. I don't even know if the market was normal before this all happened. But we were used to seeing, let's say 100, 150 points on a good day with the Dow. Now 100 points is like a 3-second candle. Like literally it'll bounce around 400 and 500 points. The charts look good, like the SPY, looks like a normal mover, but this is like a $12 ramp up late in the day. I mean, just insane. Now the good thing is if you get on the right side of that, you have this enormous potential to capture alpha. And this is what I love about trading, because these are the times I do the best. This was my best week by far. In fact, my week was so good, it was what a month normally is. And because of the volatility, I've always thrived in mass volatility situations, and I love them. Unfortunately, I don't get them every day. But, you know, that's the thing of the beauty about them. If you get on the right side, you can make an enormous amount of money. But this too shall pass. Now, the thing that we've got to look at here is it's really difficult to prepare days ahead of time, because you don't know what's going to happen for days. We've sort of gotten into this mode where we're just day trading and scalping consistently, because to say, the market's going to be here on Tuesday, or I see the market playing out like this week, going long this week or short this week or bullish this week or bearish this week, you can say that. And normally you could make a bet on that and survive the week early on if you were wrong to get paid out at the end of the week, example. But here, if you're wrong about that, you're going to have a hell of a drawdown. I mean, you really could wake up to 1,000 points down, 1,000 points up. I mean, you really could be in a scenario like that. We've seen that. In fact, we've done nothing but make history. Not only has it been the fastest historical drop in market times since like World War II, but, you know, we're talking about limit down one day, followed by a limit up the next. I'm not sure that's even happened. I mean, I probably could find it out on the internets, but man, I'm not even going to look about it. All I know is I don't see that crap often. So that's that. You know, it's just crazy what we're witnessing. So you've got, I guess what I'm saying about it is that it's difficult to hold a position here, considering the market doesn't really know where it's going. And yeah, we've had a lot of ramp ups. Killer Friday here late, maybe some hope around the corner here to continue on with this, but you know, it could easily fade. Only time will tell. So what I like to do in a situation like this is go to both sides of the fence and say, if the market is very bearish, this is what I would like to do. If the market is bullish, this is what I would like to do. Now, I've been spending most of my time just trading futures and now trading the SPY. In a volatile situation like this, if you're looking for the ones that move, the market moves, you follow the market. Market goes down, you short the market. That's sort of just the way the pattern has been working. So I've been doing this mainly. And I'm just looking at situations here to try to get me into a support level like today, where you came down in here, you found yourself a nice little level. It got you to an area where you could put a trade on with a very little bit of risk and possibly catch a nice move, which in this case it did. You had a nice little double bottom here, so I'm just constantly sniffing out bottoms here if I feel the market's going to hold. Early on, we're starting to see a lot of selling out of these, so I sometimes take the short angle. If we get some rejection early in the morning, I feel the first move will be lower before it's higher, and that's just kind of how I've been working it. Now, if we continue to sell off, I'm going to give you just like one or two names here. I'm not going to flood the airways here with this. I would say Roku. Roku has been my go-to play here. And I'll tell you why. Because with Roku, what we're getting here is it was already going down before the correction. And then on the days we've had 11 or 1,200 point up days, this thing has barely participated. And take a look. I mean, look at this monstrous move here late in the day in the Dow. I mean, this is like 1,000 freaking points here, right? I mean, straight up in the air. And then you take a look at Roku, and it hasn't done anything. Now, this is not a topic about I love a stock or what's good about a stock or what's bad about a stock. That's what ruins us as traders, is getting married to a stock. What we're looking for is things like relative strength. So when I'm looking at something that is normally weak in a bullish market, that means when the market tanks, this thing is going to go first. It's going to take the brunt of the punishment. And that's exactly what it's done. I mean, this thing has just gone nonstop from 140 to 80. Not only that, every single spike that you get in this thing just gets dusted. It can't even pull away and put you in a bad situation first. Now, at some point, don't get me wrong, this is going to change. It's going to go back to being the big old Momo player that it used to be. I had fun longing this thing last year too. I love this stock. It's been good. Been a good trader. But right now you're in that cycle. Maybe it's got to find another bottom down here. Maybe it won't get ironed out for earnings. But right now it is what it is. It's no sense in fighting it. It's got relative weakness actually against the market. You know, look how big that ramp was. This one was just like $2. And considering what other people were doing, $2 isn't a whole lot. It's money, but it's not a whole lot compared to relation to what everybody else is doing. But if you happen to catch the $2, congratulations. Put the money in your pocket. You've done very well, and your money has been earned. So I like this one short. I like to stick with this one. Now, there are a couple that have a flip side to this thing that have been, I think, holding up really good considering the circumstances. And I would have to say the other one is King Baba here. I mean, Baba, I know the chart has gone down. The chart has been selling off. But when you compare it to other charts, that's not too bad. I mean, it's still clinging in there to a pretty good range, and it's just kind of touching its 200-day moving average. So all this means is I don't know if I would even trade either one of these right now, to be honest with you. What I would have to see is if I felt the market was going to go higher and we were going to be in for a bullish day, I would go with some Baba. I would be on the Baba's side. If the market was going to be weak and it was selling off a lot, I would look to short Roku if I wasn't just specifically trading a market instrument. That's the path I would take here. I think you can also make the case for Netflix. Held up pretty well considering the overall environment. Now, when you also want to flip to that, if you want to add things to the short watch in these times of crises, because you never know where a real bottom is, I don't know how you can't write off in a case these airlines. Like when you're thinking about what's overlaying the market and who is going to either benefit from this or who's really going to take the punishment for this, I think at the top of that list, you have got to put airlines, travel industry companies, cruise liners, right? Is that RHL? Is that what it is we're talking about? Royal Cruise Line? RCL, I think it is. Let me say, yeah, I don't know if I'm doing this right. Yeah, Royal Caribbean. This one here. Yeah. These are going to be your natural, but it's obvious, you know. Again, I'm not picking on companies here. I'm just simply saying if the government's shutting down everyone and barricading in them their homes, no one's going to take a cruise liner right now. You know, when they're quarantining cruise liners and people are getting sick on them from the buffet, no one is going on a cruise really, right? So how are they going to make any money? It's like that's the industry that's going to suffer the most right there. It's going to be travel. So when you're looking at things to say, what will I continually short until the theme stops? It's going to be these. Now, eventually, I feel that what you're witnessing right now is what the credit crisis was to banks is what the coronavirus is to the travel industry. They're going to need more bailouts is what this is going to end up having to transpire here. And maybe that changes the tempo and they become along. At some point, that's what will happen. But for right now, they're going to get punished. And from there, you're going to see retail names. You're going to have traffic down at malls. Consumer confidence is going to go down. It's just a domino effect from there. So kind of keep those. So I'm going to just kind of wrap it here by saying I'm specifically just trading the market. I'm just sticking with the fluctuations in the movement in the market and trying to focus on just that one chart right now. It's making life easier for me, and it was really beneficial this week. When I talk about relative weakness and relative strength, I think if you're looking for bullish moves and you see stocks take off, you have some names here that strike a pretty good chord. You could put Apple in that. I think Apple's held up relatively well considering it was up like a couple 100%. It's held most of that through. It's been pretty damn solid. BABA has been pretty solid. Nvidia has been pretty solid. Yes, they've pulled back. Yes, they're down. But compared to other peers in the industry and compared to market wide, they've done pretty damn good. So if the market turns around, you get a couple day rally, I would think this is where the majority of the money will go. On the flip side of that, money will exit airlines, money will exit travel companies. And for God's sakes, I don't know what the deal is with Roku. I can't even answer that question. I would figure Roku would be like a Netflix. More people would stay home and watch more Roku. But guys, look at this. Oh my goodness. Anyway, that's my take on it. We can only see Monday. It's hard to tell. Really strong close. Some positive comments came out of the speech. Maybe it was a little bit more tasty for the market, but only time shall tell. It's not up to us to decide. Let the market decide. So enjoy the rest of your day, guys. I appreciate you watching Market Mutterings. You need help trading, you know where I'm at. You just want to hear my voice, I appreciate that. Give me a thumbs up. Follow the channel. It's all good. Until next week, guys, take care. Thanks for watching.